Hey, it's Andreas, and here on YouTube I talk about money, investing, and personal finance. So, if you want to improve your financial future, follow along in this video as I will talk about C and exemplify how I think about investments. And you can incorporate some of this into your own analysis. Alright, so C has three main business areas. I will cover all of them as well as talk about risks and a conclusion. And in terms of revenue grew by more than 100% for 2021 compared to the year before that. This is huge. However, they made a huge miss in terms of EBITDA, that's earnings before interest, taxes, and depreciation, and this caused the stock to slide by more than 75%. Not the total slide here. Obviously, we have some macroeconomic situation that's playing a part, but they dipped on earnings as well. And as I'm making this video, they're trading slightly above $90 a share. However, this is the price. Remember, price is what you pay, value is what you get. We will get into value later in this video. All right, so Garena, revenue grew by more than 100% year over year. And this is the company that's known for the game Free Fire. What's Free Fire, you might ask? You might have never heard of it if you're in the United States or here in Europe, but this is the largest game in the world in terms of players. It's crazy. If you're in Southeast Asia or Latin America, you know about this game. And it's a battle royale that you do on your mobile. So think about the game from Epic Games, I don't remember what it's called, and the PUBG, one of the first ones. That's basically that for mobile. And in terms of generating revenue, they do this by selling something called diamonds, basically in-game currency for real money. All right. And if you buy these diamonds, this is called a booking. And once the player spends the money in game, it becomes revenue. So this is the separation that C does in terms of presenting the business side of Garena here. And I will talk a bit more about the business model of how they monetize this game when I talk about whether or not this company is in trouble, because I've done a lot of research for you guys here. Moving on to Shopee. Now this is an e-commerce platform. They started in Singapore, and in terms of EBITDA per order, they're still losing money. They're losing 15 cents per order. However, analysts believe that this year this will be positive. Of course, I mean, business justifications, economy of scale, that they're growing, they have a lot of users, the consumer behavior that we have in the beginning with trying out this new service by doing small orders, and then once we trust it, we start putting in larger orders. All of those things are taken into account when analyzing this side of the business. And we will also have a comment from the CEO of the company regarding when he believes that this company will be self-sustaining for growth in terms of its own generated cash flow. Because right now, Garena is the cash flow engine that's driving Shopee and C-Money. C-Money, that's the digital payments solution here that is very well integrated into Shopee, and new acquisition of user is heavily driven by adoption of the e-commerce platform as well. In terms of numbers, revenue up more than 700% year over year. This is crazy numbers. Remember, Snowflake used to have revenue over 100% year over year, and when they fell to 81% year over year, stock price tanked. So this company is still very much a growth company. However, are they in trouble or not? Well, in terms of taking a look at where the big cash flow engine Garena, with the Free Fire game is, it's basically back at 2020 levels right now. So we have seen some fall off there in player counts and the money that the game is generating. So I took a look at what's actually monetizing this game. So you have two different payment methods that you can choose, two different ways that you can gain these diamonds, this in-game currency for real money. Basically, you can just straight up pay for a package of diamonds. Let's say $2 for 200 diamonds and $10 for 1200 diamonds, etc. You pay, you get diamonds instantly. But you also have a subscription model. And this subscription model lets you have more diamonds for a little bit less in-game real world currency. However, you don't get the diamonds right away. You get them once you log in. You get a bunch of them, and then you have to log in the next day again to get more diamonds, and the next. So you have this subscription. You can choose a week or a month. So this is a great way in terms of behavioral economics, creating those positive feedback loop for the players to create more retention, creating the habit of logging in daily to get those rewards, tingling that dopamine for the players. And this is something that I believe will cause the game to be able to sustain players more into the future, to not see a sharp drop off as these habits are formed in a lot of players, that they log in every day to get these diamonds. So monetization wise, it's a genius move. And I can see that a lot of analysts worry about this slowdown in Garena. However, in my opinion, I do not think that this is something to worry greatly about. And, just to quote Forrest Lee here, the CEO from the conference call, because Garena is not required to finance the growth forever. Let me quote the CEO for those of you who are listening in. So he says, as a result, we currently expect that by 2025, cash generated by Shopee and C-Money proactively will enable these two businesses to substantially self-fund their own long-term growth. So, all right, end quote. So this basically means that he believes that they will no longer be so heavily reliant on cash from the mobile games in the future. And this is great. This is what I want to see. And just in terms of track record, the founder has done a great job so far. Why shouldn't he continue to do a great job in the future? Let's also talk about valuation, because remember, price is what you pay, value is what you get. And if we take a look at price to sales, you can see that it's slightly below 5 while I'm doing this research. And this is almost the cheapest price that I've seen the price to sale ratio at for this company. So it's a great steal. It's a great deal, in my opinion, right now. I like the valuation of this company very much at current levels. However, let's not close our eyes for risks. Let's not stick the head in the sand. We still have slowdown in Garena, and although I talk about the monetization and that I believe that the risk is a bit exaggerated, this is still a risk. And what about Fatfire in India, Free Fire in India? They have banned the game, all right? And we can only speculate as to why. Maybe it is because that C use data centers from Tencent in India or something like that, and tensions are of course there between India and China. Could these sanctions spill over into other areas of C's business so that they target maybe Shopee in India? This would not be good. This is of course a risk. And then we also have the relationship with Tencent themselves, because right now C is the preferred distributor of Tencent games in Southeast Asia. However, this deal only lasts until 2023. What will happen after that? we can only speculate. And let's not ignore these risks, they are there. However, once again, all companies face risks. A few overcome them and become great mega cap companies. A few overcome them and continue to survive, and a lot of companies fail. In conclusion, I think that the last quarter, the Q4 of last year, it was okay. Stock prices was heavily punished here in recent months, and this has made the stock cheap, in my opinion. This is not a guarantee for the stock. Of course, it can go down even further, but I think this warrants for me to buy a small position on my next paycheck once I get disposable income again. Because with this low price to sales valuation, I think it's a good candidate for a potential multi-bagger. And in the meantime, I hope you make a ton of money, whatever trades you decide to do. Invest safe, take care, bye bye.